Good morning. Happy Friday. New all-time highs again. Amazing market. V bottom, straight up back to the highs. Well, of course, the question is, where do we go from here? And all we can do is follow the trend and the concepts that we use every single day. So one of them is that after a greater than 100% retracement, expect a stall in momentum, which is really just common sense. You know, something, whether it's at the broader markets, a particular stock that makes a low and runs right back up to the highs with little to no rest, it's good. The momentum is going to stall. So, you know, thinking about today objectively and still, you know, from a point of view that anything can happen, you know, initially my bias here is that it's going to be an uneventful day for the most part, which is okay. You know, in reality, we want this market to stall here. We'd like to see it pull back a little bit from this resistance area, even though, you know, it did make this peekaboo high to a new all-time high. Because if it just takes off and runs from here, I think that sets up a bearish scenario intermediate term. You know, we covered some market internals yesterday that is telling us that there's still gas in the tank before the internals would tell us to be concerned about that, and where, you know, things are more likely to pull back. And that is still the case, even though breadth finally got to a bearish extreme. That really doesn't mean a whole heck of a lot until sentiment reaches there as well. Because historically, we need traders, especially the wrong way option traders, to jump on board, to, you know, all in, fistful of calls and expecting the market to explode higher. And when those two come into alignment with each other, historically, odds are extremely high that the market's going to pull back, and we just don't have that yet. So while we have a V bottom and move up to prior resistance, the logical bias here is that, you know, don't be jumping on board at this point, unless something is coming off of a low and maybe it's going to play catch up. If something is moved up like the broader markets has, you know, odds are you're going to be sitting with it for a while. And as long as you have probably relatively wider stops, it would be okay. But if you're looking for short-term gains in the moment, it's not likely to happen at this time. So pre-market, you know, and from yesterday, you know, we had this little sideways consolidation. We're starting to get lower highs, higher lows. So the spring is being wound here. And just based on the daily chart, I would suspect that it's going to move lower, but you know, we've got overhead resistance now, and we'll just duplicate that, and we've got some support area below, and just let's do it the right way and make it green. And so we've got a couple of lines in the sand here pre-market to pay attention to see which way prices might roll here to the downside, or whether this consolidation just results in a further, you know, move up, and we do get that blast off kind of a move that would be more of a concern intermediate term. So right now, you know, unless they can get up through here, and really, I guess that's a real move to the downside there. 29.30, whatever. Yeah. So we've got this pivot low here, but this consolidation here, that would be a stopping point if it breaks below here, but there is a void down into that level. So there's the two reference points, looking at the S&Ps, looking at the spiders. It's going to be, well, not quite the same because it doesn't trade 24 hours, but you can see the move down here pre-market, and it's kind of inching lower at this time. And we've got some support down here. And, you know, it's what we do. We mark off our reference points and see which way things go every day and what's the reaction once they get there. So, for example, let's assume prices do come down to this level down here, and buyers begin to stabilize it. And after a half hour or so, they can't lift it off to test overhead resistance or get through it. well, then that opens up the door to potentially going lower. So intraday trading is the same as swing trading from the point of view of mark off your reference points relative to the time frame you're trading, see what happens when prices get there, look at the price patterns and just wash and repeat, So again, trends are up. The first reference point of support is yesterday's low. And, at this point in time, just as we looked at the futures, I think it's reasonable to think that we're going to have probably an inside day where things just consolidate at this point. So maybe a boring end of the week Friday. We'll see how it all shapes up. Qs, bringing up the rear, just trading inside the range at this time. Maybe this plays additional catch up to make a new all-time high. And we'll just have to see how it plays out here. But, coming up to resistance, so the upside is limited. Intraday, there's opportunities as always. But from a swing trading perspective, and if this would have been gapping up this morning, I would have been thinking short it for a day trade point of view. And for swing trades, take some off the table. That's not happening. So let's just see if it consolidates here and which way it goes. Futures, you can see the inside day that's beginning to form. Prices backed off at the end of the day. And we'll just see if we get some trading here sideways. Looking at this 2-bar consolidation and the breakout above, reach here, minor topping tail, closes with an inside day. And then on Friday, that would be an important line on the sand short term for a possible breakout bar failure pattern, which is exactly what that would form if it sets up that way, which is a breakout above a little minor consolidation, minor topping tail, inside bar, and then it breaks the low of the inside bar. That would start a pullback. Now, it wouldn't change the bullishness of this trend, but as a short-term trader, that's something that I would pay attention to and take the opportunity as for shorting opportunities intraday. YM, actually made a more convincing new all-time high. Is that an all-time high? Over the prior high? No, it's not an all-time high. So it got through here, and that's got room to get up to that all-time high. We'll see what it does, but then the greater than 100% retracement concept suggests that it's likely to have a stall in momentum, and that's what we have at this point in time. So we'll just have to see the same story. Can it get out of this little trading range? Is it to the upside or is it to the downside? Until it does that, looking at this particular chart, sit on your hands and do nothing. Bonds down a little bit here, but still trending up, and may or may not be aware that the 10-year yield went under 2% yesterday, and market didn't care too much about it, but it is something that is a concern that interest rates continue to inch lower, and we really want to see this begin to pull back. And you can see it's coming up into resistance, so it does have a little bit more room to get up to that prior high level. And it has had a heck of a run. And you can see a little weekly consolidation. And we're going to keep an eye on where this closes this week. So when you get a little, it's in an uptrend, you get a little bit of a consolidation like this, a resting. And in strong uptrends, that little rest should be enough. So, the essence of a breakout, you don't need a long consolidation. If it happens, it happens. But 2 days in a strong trend could be enough to create a continuation pattern. And when after a rest, it should have the ability to hold on to its gains, and it's kind of backing off already. So we'll see what happens here. But this would be next week, like we do. Prior bars low is our first reference point of support. So on Monday, wherever this closes, it breaks below that. That would be something that would suggest a little bit more downside, and we'll see where that goes. Yields going up, and I think that'd actually be a good good for the broader markets to see interest rates pulling up, because historically, them going down as they are, it suggests a slowing in the economy. And now we've got the Fed saying that they're going to, or entertaining, they'll need more information. If you listen to what the Fed chair said, they want to collect more information, but they're more likely to lower interest rates. And of course, one of the reasons why, gold is breaking out here, as you can see, we've been monitoring this, and now it's cleared several years of these highs here, which opens up the door to a pretty significant move to the upside. So gold is bullish here, buy pullbacks, buy breakouts. So it finally got out of a multi-year range and bullish price action. A little extended here short term, but bullish price action nonetheless. And oil pushing up into this resistance area here on the possible Iran news, blah, blah, blah. You probably saw it. Anyway, so it made this bottom here, which we were looking at when it retested, talked about possible W bottom. When it was down here, that actually set up. It's pushed up into resistance. Momentum is now stalling and makes sense. So, the prior bar's day's low is way down here. And so what we do is, very objectively say, and this is, we were talking yesterday in the green room about something looking bearish on an intraday chart, yet the daily chart is still bullish. So one way of kind of just, quick, easy way without even looking at the charts, because as a swing trader, you don't want to get really so involved in what's happening intraday and give up a good position because of 5-minute charts in a downtrend. But a really objective, easy way, even as a swing trader, to say, hey, you know what, here's a bullish bar, and if it moves down the halfway point, regardless of whatever it looks like intraday, and starts pushing beyond that, well, maybe that's something, probably is something to be a little bit more of a concern. So, for example, you see here this bullish wide range bar coming off of the low. And then next day prices stalled and they dipped down, but they didn't get halfway down into that bullish bar at all. And then they closed back up again. But if you were looking at this bar intraday, the 5-minute probably in a downtrend for a moment, and then it bottomed and turned back up again. So just an easy way to kind of objectively look at what's happening without, intraday, without really looking at those charts. It just say, hey, as long as it holds a certain level, reasonable level within that range, things are okay. And then the shorter time frames, whether it's a 5-minute, a 2-minute, a 10-minute, whatever you're looking at, should begin to come into alignment with the bigger picture and then move up. And so same thing today, it's gapped up, it's coming up to resistance, a little bit of profit taking going on up here. Hourly is still in an uptrend, and maybe it just chops around here for a while, but a nice move off of the low. And we looked at gold, and let's take a look at a couple of things here. Russell came up, it gapped up and hit that pivot high of price resistance, and it intraday, it actually looked like it was going to lead the S&P and the Qs higher, and the S&P and the Qs did go higher into the close, and we took advantage of that in the green room, and the Russell just kind of petered out there. So, sometimes what looks like what was going to happen, it doesn't really play out, but, the daily chart here, this coming up into that resistance, just put a cap on what that did, but hey, it cleared these moving averages. It got deep into this resistance. It's a good sign for the markets as well. Let's see if it chops around here and what happens into next week. And the transports, improved. Yesterday, I spoke about wanting to see this get above the 200, try and get up to the 50 in this resistance area, and it did that. So a lot of positives, but prices are at prior highs and had a nice run. So a little stall here, maybe a boring day, going nowhere and consolidating is what we're in store. So we'll see. You can see a whole lot of red here in what's active. So some profit taking obviously going on. We'll see to what extent it is. And finally, meatless is starting to pull back here a little bit. I'll let Dan talk about that. And so go ahead, Dan, all yours.
Hey, good morning. Yeah, I did a video yesterday, as you know, on the setup on Beyond and doing a bear call credit spread, picking the right one, etc. I posted it. Let me do my other screen. I like this one at the market open. Hey, Gustav. Yeah, hey, Gustav, did you do the one that expired today? I remember in the afternoon, I gave you the green light right here on this right here on this 2-bar reversal. That's when I said go for it. And then I posted it as an official trade under this green bar, but now it's gapping under it, as you can see. So, you know, we aren't going to get filled at the desired limit. That's all right. It's another trade. Let's look at opens here. Let's start with the weekly options trader. NVIDIA put spread, Honeywell put spread, Triple M. These are all put spreads. Triple M looks fantastic. It looks, to me, it looks like it's a directional over the yesterday's high. UNH pulled in a little bit. We have a put spread on that. Tilray put spread looks great. I tighten the stop. Lift put spread, which expires today. The 59.5. So just let that expire worthless. And all the others are for next week expiration. Amgen. And that's it in the weekly options trader. Now the swing and options trader. AON, we have a lot of positions open. AON, long stock, looks fantastic. Honeywell, we have a bull call diagonal spread. I'll let Greg explain what that means. WTR, long stock. Eli, long stock with a pig target because of the weekly and monthly. Tilray, put spread. CRCM. We're short stock. Bro, long stock. HLT, long stock. Lift, we have 2 trades, long stock and a put spread. AVY, long stock with a tightened stop yesterday. Kim, longer term trade. This is a REIT. Cody, long stock. It's not acting right. We bought this little 1, 2, 3 right here, and it's going nowhere. But there's nothing to do in terms of an adjustment. Wow, I have a lot of positions. AIG, long stock, looks great. Roku, covered call. So the short call is doing its job perfectly. SynF, long stock, looks great. Mohawk, covered call. Triple W, short stock. BBBY, short stock. There you go. Let's now go hunting here. Oh, Funko came from McGraw. He emailed me that this morning. And my initial comment was, what a beautiful 2 p.m. breakout right there. Look at that. Right over this red bar. That was a no-brainer entry right there. But McGraw asked me, is it too late? And he's used to me saying yes. But in this case, the answer is no, McGraw. Look, reverse head and shoulders, shakeout, gapped up, igniting. Look at weekly, look at monthly. Look, it looks fantastic. So no, it's not too late. ADS, McGraw sent me this one. I said, yeah, you can short the lows. It looks, so I'll put, you know, if the market turns weak, that's in your back pocket as a short watch. PAGs, McGraw, again, I think you sent that to me. Yeah, over yesterday's high is fine. Here's an oil, that beautiful 15-minute close yesterday. And it's actually a reverse head and shoulders on the 15-minute chart. See that? Breakdown, back up, sideways. Looks great. Yeah, I gave you like 5 oils yesterday that looked good. Nuon, I think they lowered guidance or something like that. I got no interest in that. C's. It was either earnings or positive news, I forget. There's no price void, but keep an eye on it. 30-minute high. KFY, I think at earnings, 45.39, bearish gap, but no price void. IFF. McGraw, this was you. I like it, but I said it retraced from the square top as opposed to a V top, which means it's just going to be more resistance on the way back up. HTZ 1675, gapping to this little, this will be support right here on an hourly chart, but nothing to do. ARE 146. All right, that's a bearish gap. That might give us a day trade. I'm going to put that here. Work had an IPO yesterday. Now see, remember I did that video on, I forget, whatever that IPO 2-minute chart that the guy in here made 20 grand. And that was a very clean IPO. I mean, most of these recent IPOs are just crazy. Look at Chewy all over the place. What were some of the other ones? Oh, well, you can look at them, but yeah, they're all crazy. KMX, 87 bucks. That's a very bullish gap to all-time highs, but it's a little excessive. Watch it on a pullback. Red Hat had earnings. It's kind of a bullish 1, 2, 3. It had earnings, so volatility is going to be higher. So let's keep an eye on that for a credit spread. And I would prefer it a put spread if it sets up bullish. Why? Because it's a bullish daily weekly. Red has IBM takeover. For real or rumors? But I don't care. I'll still trade the chart. Okay, I don't care. As long as I go through my checklist and it's liquid and et cetera, that doesn't bother me one iota. Pot stock here, getting whacked. Nothing to do with it now. Greg mentioned this yesterday, TUFN. Got a bid yesterday and it's trading pretty chaotically. OMCL, this was one yesterday I mentioned, darn it. Look, another reverse head and shoulders on the weekly. Look at that. It's beautiful. It's not textbook because you think the left shoulder is a lot higher, but this deep move, all these tails then being negated, that's your entry over the tail with your daily confirming it. It's a daily breakout. XEL was the energy I mentioned yesterday. It's still holding well. Keep that on your list. I should have triggered that. I just like this 2-bar reversal after 100% retracement. It's gapping down a little bit today. AEP over yesterday's high. McGraw, here's your Kern. Wow, this thing is volatile. ESC Fiber is another one that's very chaotic. Look at that. That's not tradable. But Lima, this coffee shop was on this beautiful 1, 2, 3. All right, I'm done. Perfect timing. All right, cues here. It's just, it's breaking out pre-market into the gap fill. I'm doing absolutely nothing here for a few minutes. Glancing at opens, see if we have any gifts or problems on our hands. Like triple W. We can tighten the stop now. Win, remember McGraw? I didn't like the hourly yet, or 15 or hourly. So I'm glad we stayed out of that one.